All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Inner Circle Live pre-New York session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. Hope everybody is doing well today. This beautiful, beautiful Wednesday morning. So as always, let's turn off all distractions, grab a pen and paper, let's take lots of notes, and let's make sure that we participate and engage. All right. So let me just double check one thing. All right, we'll do. So let's dive into some fundamentals and then we'll dive into the charts, man. Some things happening this morning that we'll get caught up on. We'll take a look at some of the setups we've been sitting in and we'll see what the market has for us for the day. All right. So real quick, just drop me one in the chat if you can hear me okay. No echoes or anything like that. Testing some new things here. Beautiful. All right, cool. So let's do this. All right, so trading economics. Let's get there first. UK inflation rate. We're talking about the pound yesterday. UK inflation rate slows more than expected. Annual inflation rate in the UK slowed to 3.9% in November, the lowest since September 2021 from 4.6 in October, and well below forecast of 4.4. The largest downward contribution came from transportation, recreation, and culture and food. So things are slowing down in the UK. Something for us to take note of. We'll take a look at those some of those pound pairs and see what transpired with that news. So inflation slowing down. Excuse me. Meaning, so as we wrap up the year, looking at some of those reversals and those pound pairs continuing to the downside. All right. German consumer morale beats estimates. The GfK Consumer Climate Indicator for Germany rose to negative 25.1 heading into January 2024 from a marginally revised negative 27.6 in December. So consumer morale in the largest country in the Eurozone starting to shift a bit, right? A little bit more upbeat. Then we have oil on the move. Brent crude futures hit a 2-week high above 79.5 per barrel on Wednesday, buoyed by investors' focus on the Red Sea geopolitical tension. Talked about it yesterday, right? Important things. Houthi attacks disrupted global trade, prompting the U.S. to launch a task force to protect commerce. Despite this, Houthi rebels remain defiant. Separately, the U.S. acquired 2.1 million barrels of crude for February delivery to replenish its strategic petroleum reserves. However, U.S. crude inventories rose by 1 million barrels, contrary to predictions of a 2.2 million barrel decline. Analysts raised concerns about a steady growth in U.S. oil production, noting that its oil exports have matched Saudi Arabia and Russia's total output. So notes there on oil. We've been talking about oil. We've been waiting on it, been being patient there, and oil is starting to see a shift. All right, starting to see a shift again in another key zone. So definitely something to also keep note of. Okay. Cool deal. So that is oil. Then kind of along with that UK news, UK 10-year gilt falls to 8-month low. All right. Yield fell further toward 3.5%, marking its lowest point in 8 months, as recent inflation data strengthened expectations for potential rate cuts by the Bank of England in 2024. Inflation in the UK dropped 3.8%, lowest in September 2021, surpassing the forecast of 4.4. The core rate also declined to 5.1, the lowest since January 2022, well below the prediction of 5.6. As a result, traders anticipate a total decrease of 143 basis points. Interesting. The first rate cut is predicted to occur in March, with strong possibility of five additional quarter point cuts, and a 70% chance of a sixth reduction. This is interesting. Also, markets anticipate a 75 basis point rate cut by the Federal Reserve in 2024. So we're starting to see those predictions tick up a bit, in the percentages. So we'll start to see some of those things start to get priced into the market as well. So we'll keep an eye on those, and then we'll see if the data matches. If there's a mismatch there, we could see some strong volatility, right? As surprise reactions, quote unquote. So we'll watch that and see how things go there. This is my first time seeing these percentages. So this is interesting here. We'll continue to keep an eye on that. Over to the calendar. Here we see that CPI data for the pound came in well below the expectation there. We have FOMC members speaking today, right? Could cause some volatility there. We have consumer confidence for the United States coming in at 10 o'clock, crude oil inventories, Bank of Canada summary of deliberations, the meeting notes also coming in today. So a lighter day, but some of the FOMC members that are starting to come to the microphone, that could kind of spark some attention there. So we'll keep our eyes peeled on that side as well. All right. Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
I'm doing well, man. Doing well. How about yourself?
Oh, I'm doing pretty good. Glad to be here. Ready for the holidays, man.
Yes, sir. Yes, sir. Um, Anything fundamentally caught your eye?
Oh man, a lot about back and forth with the rhetoric, eh?
Oh man.
Uh, oh man,
Yeah,
which kind of pulls me out of the market a little bit, especially towards the end of the year. It's because what the BOE had pretty much a hawkish stance, if I'm not mistaken.
they did.
Yeah, so
They
they
did.
maintained a hawkish stance, which created that rally. But this new data, it kind of, I know on Saturday we were having a back and forth like on that pound dollar that, hey, maybe it retests the highs and the right tip of that crown we found on a higher time frame, but it might be playing right into that narrative, you know.
It
Um,
does look like it, doesn't it?
yeah, since this data came out this early this morning,
Yeah,
so it's kind of you have to look. I guess pay super close attention to the technical levels at this point because you've got the Fed saying what they're saying. That he came out dovish. The BOE came out more hawkish, and so did the ECB. But the data that's coming out now is is pushing it towards is coming down. You've got the gilt that you the bonds,
yeah,
percentages coming down, and the currency usually follows. You know,
yeah.
so when you see those numbers decreasing like that, so I heard you talking about that this morning, with the article. So that may lead, give way to a bearish pound, you know, for longer than we think.
It definitely looks like it, bro. It definitely looks like it. Some of that is playing out on the charts too. So
Oh yeah,
it's definitely gonna be interesting to see how things continue to transpire.
yeah, most definitely. So it's going to be interesting into the year in these last week or so.
Yes, sir. Yes, sir. Appreciate you, Duke. Team, you guys have anything that caught your eye fundamentally, um, that you want to discuss? No, maybe. No.
Good
All right.
morning, everybody.
Good morning, Ryan. What's happening?
Nothing much, man. Another day, another dollar.
Yes, sir.
All
Yes,
right.
sir. What's
So,
going on?
so one thing I want to talk about is Euro NZD. That fib,
Oh,
my 4 hour fib just popped. Probably, I say maybe about an hour ago, and it
yeah.
was an
Yeah, I haven't
eighty
gotten it.
twenty play.
Yep.
It's
Yep.
just that, it's just interesting to see that, that 20% that actually happens, is something that you'll be surprised, like, really? Like, I can't
Yeah,
believe this really
that
happened.
one
But
took me that one took me out too.
Yep.
you know, but it gets me more excited to see what the next play is. So I definitely want to take a look.
Yeah, for sure, for sure. That's definitely on my list to take a look at. Yeah, it's an interesting one to study too. But some other things make sense too when it comes to um the war expansion, right? And we've talked about those commodity currencies during war times. Um,
Mhm.
they pick up a little bit of strength, a little bit of steam. So from that perspective, and we'll break it down, we'll take a look at it. Like I said, it's on my list. From that perspective, the NZD gaining some strength there makes sense, right? As the fear
Mm.
of the expansion of that war kind of presses in a little bit, and investors are looking at that. So it makes it interesting, man. It definitely does. Definitely does. And we'll definitely take a look at that Euro NZD for sure.
And then also, Ryan, with the that's why you have the that Aussie cab bouncing around too, right?
Ah, yeah. Yeah.
Because not only that, just because of your your overall sentiment in the market right now, right? You saw how the S&P, your indices are way overextended. So you got things rallying right now, all not only because of the war too, but because of the sense that, hey man, we might be avoiding this recession. And you've got the inflation data coming out like you got this morning from the pound, showing that inflation number is continuing to come down, globally. That's
Yeah.
that's positive. That's positive for your stock market. And we know that your commodity currencies typically rally with that. So that's what I'm taking from it too, is that, man,
True.
we got the end of the year rally because of, just like you were just reading with the pound, that new data, like they're predicting, accelerated cuts coming in March too.
Yeah.
Now after you just had the BOE take a very hawkish stance, now you've got investors saying, hey, we're looking at this pound too, and we're looking at the rates coming down, interest rate, the inflation coming down, and so those interest rates cuts coming in March, just like they're trying to predict here in the United States. That's going to cause a more positive sentiment, and that's why you see things rallying in addition to the commodity currency. So when you look at, that New Zealand currency, putting that pressure, across the board, that's one of the reasons why as well. So
That makes total
fascinating.
sense.
Hmm.
That makes total sense. While we're talking about it, let's go ahead and take a look at it. So, uh, this was the scenario here. 80/20 on the 4 hour, right? Shallow retracement. We got this consolidation, and now we're getting this breakdown. And we're breaking this key level of weekly support. Right. I'm going to go back to the weekly time frame and take a look at things because we've been watching this pair for a while. But we broke this key level of weekly support and we're headed south. Right. So as we come back, right, long while ago, we started talking about this potential crown pattern on this weekly time frame on this Euro NZD. Breaking this key weekly level is really, really important here, right? So now we're headed south and we're looking at pullbacks and continuations to the downside. From a weekly time frame perspective, 171,918 is the next support level, right? We're looking for off that 4 hour 80/20, we're looking for a pullback to take back some of this bearish move that we had, right? But we're not getting it, right? So now we're looking for price to continue to the downside. So a break of this key weekly support level, right? Weekly support here, and it was resistance here. So break of this level, now what I'm looking for is at some point a pullback to potentially retest that weekly level. And if that holds, then looking for that continuation to the downside. All right. So as we come down to the daily time frame here, on the daily, we see we did get to a 382 here, but right, fundamentals are taking over, right? And we're pressing to the downside. That's that weekly support level there. All right. So now, like I said, it's about, let's see if we get at some point a pullback to retest this level. once things settle down, and then see if we get a continuation to the downside. All right. And there's that weekly support level at 171. All right. We got daily support there as well. That's also that 382 level on the daily time frame. Okay. So got a ways to go from a higher time frame perspective. But it's something that we saw as a possibility way back in August, right? Way back in August, we were looking at this and said if price holds at these levels, we could see this thing turn over. And we're seeing that happen, right? Higher time frames controlling the lower time frame. So coming back to the 4-hour time frame here, right? So now we look for a reset. Now we look for a reset. Once we get a swing low to form, we'll look for a new AB boundary pullback, and it may come back into this range here as well, right? That's not out of the realm of possibility for price to push back into this range. We've seen that happen multiple times as well. So once we get things to settle in, we'll look for a pullback of some sort, a high price, and then look for opportunity, potentially continue this thing to the downside. Right? So this was definitely an interesting one. Sat in that consolidation for quite some time, but it did stop us out, right? Did not go in our favor on that. But the longer term move, right? Here's my original entry here at 181, right? That original move is still playing out to the downside. So we continue to watch now these waves as they form. Okay. So coming down to the one. Let's run a fib off the high here so that we can track these waves to the downside. All right. And that AB boundary got taken out in that consolidation. So we'll run another one there. So that's where we are. Right. So that's your fib on the 1-hour time frame. You got a 618 retracement there, and then you push down. So we're headed to the D extension on the 1 hour as well. And then we'll see if we get a reset. All right. So that is the Euro NZD. We'll continue to watch that one and see what happens. Any questions there? Nope. All right.
I'm thinking you probably, once that D extension gets hit, you'll probably see a major correction to the upside. Probably swing right off the B boundary.
Yeah.
Off the new fib.
Yeah. And that'll put us right in that zone if we get that
Yep.
nice deep correction, 618-786 level. Yeah. Yeah, I think so. Right. And those alternating corrections that you talk about all the time, right? So seeing a nice deep correction and then closing out the year in that corrective state and then potentially reversing from there. Yeah, I agree with you on that. I agree. Cool. So that is the Euro NZD. And let's go to take a quick peek at the dollar as it's just range bound a bit, right? And this new AB boundary off that support level, trying to push back to the upside a little bit. We'll see if we get price to continue to move there, but just slowly moving here, right? And that's on the 4-hour time frame. So not a ton doing there. We'll look at this pound NZD since we're talking about those NZDs. This one also hit our stop loss on the 4-hour, right? So there was a setup there, 80-20 scenario on the 4, wasn't able to break above that level. And with that news, there's the collapse, right? So again, here's another scenario where we broke these key levels of support, right? So we'll look for a correction and then potential opportunity to get back short. As Benny was talking about, potential for longer term moves on these pounds to the downside, right? So here we are on the daily time frame. There's our capital fib there. That's a little off, should be at the top. But price moving to the downside here, right? So if we just look at these down fibs, boom. There's our capital fib to the downside there. Didn't get the correction we were looking for, and price moving to the downside. So break of that key daily support and was the B boundary. So look for a pullback, retest this consolidation zone within this range here, and then look for continuation south ultimately making our way to the D extension here at some point at 195,666. All right, so that's from a daily time frame perspective. Saw the 4 come to the 1, and we'll run our fibs off the high, and this is how we'll track this one in these waves to the downside. That got taken out. There we go. Okay, so that 1 hour fib is also headed to the D extension off of a 50% retracement. All right, so as it settles in, gets to these D extensions, then we'll look to see if we get those pullbacks and set us up for some high prices potentially there. All right, so that's the pound NZD. Another one that didn't go in our favor, which is cool, right? We've had I've been tracking it, and we've had 4 consecutive weeks of 700 pips or more. And so it makes sense for us to take some losses. Benny talks about all the time. You don't know when that string of losses will come. And so here it is, right? That's why risk management is important, because you will have that string of losses come in at some point, and you have to be able to stay in the game, right? Not be over leveraged. So the game is a beautiful one. It's a beautiful one. All right. So you for folks watching elsewhere, you'll never hear us say that we won 100% of our trades, right? You're going to take losses in this game, and it's about managing your risk and being able to stay in the game, right? Protect your capital, stay in the game, to have another opportunity to trade. So that's really, really important as you go through this trading experience. All right. Any questions? I'm getting there too, Joy. That Euro GBP. I am getting there because we do got a celebration on our hands on that one. Any questions on this pound NZD?
Yeah, for once. No, this is good to see because it's telling you what direction to place your fibs going into next year. Some of these pairs it's almost now like a race to the bottom, right? In regards to interest rate cuts coming in
Yeah, that's a
coming
great point,
coming
actually.
coming into play now. Where you've had a lot of back and forth towards the end of the year, but now you're starting to be able to technically paint a picture going into next year. So it's good to see that a direction is starting to be formed on some of these,
Yeah.
and what based on the market sentiment, because that's what we're continuing to see this last part of the year. We're continuing to see the lagging effects of those interest rate hikes, and they're lagging. So
Hmm.
it just shows you how, just from a personal consumer perspective, how everybody is still feeling the squeeze of inflation. So you get the reports like, oh, especially here, inflation is going down. Well, you're not gonna see the results of that, in your wallet until later into next year.
Right.
Because it took us a while to get to this point, right? So they accelerated. Think about how long ago they really had to pedal to the metal in regards to increasing rates. They were increasing rates at a super fast rate, and that was the first part of the year where they were 50 basis
Hmm.
points, 75 basis point, consecutively. And now you're at the end of the year, and you're just now seeing, technically, the impact of, you know the interest rates on inflation, and you can see it
Right.
starting to creep down now. So next year, that's why you're starting to see, like, that data you ran this morning. You read this morning about what investors are projecting in regards to 100. What was it? 174, 175 basis points or something like that they were thinking in
Yeah.
cuts. In
75 on
cuts,
175. Yep.
175 is what they're projecting. So although that's what's throwing the market for this loop, is that you had the central bankers from the ECB and the BOE. They didn't take the same dovish stance that Chairman Powell did for the U.S. Fed.
Right.
It was kind of totally the opposite. Hey, we're not there yet. You know, um, Pretty much we're holding them there, and we expect to hold the rates for a longer period of time. But when you have CPI data, inflation data coming out in the UK like you did this morning, showing like, hey, it's coming down faster than expected, they're starting to predict, hey, they're going to have a shift in rhetoric, and they're going to cut a lot sooner than later, which is kind of the opposite of what the BOE was saying. So this is why you're seeing this huge move like this in the market, which is good. We just need, as traders, we need the market to pick a direction. It could be up or down.
Don't
We
matter.
just need to know which way we're going to set our fibs and how we're going to make our money. It's things get jammed up for us when the market starts bouncing around like it did on the Euro NZD.
Yep.
Like it's doing on the Aussie CAD. That's where you get jammed up, because now you get whipsawed around, and it's giving you a bit of a headache. But I'm cool with getting stopped out, because the markets take it's choosing a direction. Now I can get ready for the next setup. So
Exactly. No, well said, bro. Well said. And that's the truth. That's the truth, right? That's what we want to see as the direction chosen. So beautiful thing. Beautiful thing. All right. Let's take a look at our favorite pair, that Euro GBP. And we got to TP1 finally.
can't believe it.
we finally got there.
It was a shot worth taking.
Man, listen. It took its sweet old times, exactly. Beautiful Christmas gift, right? It took a sweet old time doing this thing, bouncing around, and then we finally got the push. Boom, TP1 hit, getting a little bit of a pullback now. And we'll see what happens from here. But TP1 hit on that Euro GBP. It took us a while to get there, man. Took us a while to get there, and all the back and forth and all the hoopla. It finally made its decision to get to that point. So now we'll watch and see what happens, to see if we get a continuation to the upside, or if this kind of ranges for a bit now that it's reached that level. So let's bounce back and take a look. Right, this is on a daily time frame on this Euro GBP. Right, we've been ranging in this 618-786 zone since June, right? So 6 months we've just been in this range, right? So we could potentially be headed back to the top of the range, and then we'll see if we head back down to the bottom of the range, right? So just as big bounce back and forth on this Euro GBP, but we're able to take advantage of those lower time frame moves back and forth, as it does its dance, which it does all the time, right? So here we are on the 1 hour time frame. There's that swing, right? And so now we'll run our fibs to the upside off the low, and we will watch to see how this thing moves. Boom. All right. So we got a 618 retracement here. Strong bullish action off the news. We're getting a pullback. So we could potentially see another push to the upside to get to that D extension there on the 1 hour. And then we'll see a reset and a retracement. Okay. So that's the Euro GBP. Kudos to everybody that sat in that one and did their best to forget about it. Kudos to you. Now we watch and see the reset. All right. Any questions on that Euro GBP?
No, I just think it's important to, let the moves play out, right? Because you take hits on some, but if you use the proper risk management, and you're setting up your proper risk to reward, right? When you're greater than that 1-to-1, you're 2-to-1, you're 3-to-1, or whatnot. It's the ones that hit the target that's going to make up for those losses. That's the whole point in having a proper risk to reward ratio. Everybody follow me on that? Drop me a one in the chat.
Yeah, drop one in the chat if you understand that. Yep.
That's
Okay.
why. So your edge plays out over time. That's why we trade through it. That's why we say, hey, just be patient with the trades. Let them play out. You're gonna have trades every once in a while where you use your judgment and say, hey, I don't like these conditions. I don't like the setup. Hey, I'm out. But for the most part, you're gonna want to let your trades play out no matter what, because you need to develop that trade discipline, and that's how it plays out over time. If not, your equity curve is going to look like the consolidation like that we see on some of the pairs, right? It's going to go, it's going to move from left to right across the middle of your chart. That's what your equity curve is going to look like in your account. And you're not going to get it trending because you're constantly cutting trades too short, not letting them run. And then you're letting your losers hit the stop. And it's just going to go back and forth. You're not going to see any gain in your account. And you're going to be wondering what the reason is. And that's what the reason is. You got to let your trade ideas play out in order to see your edge over time and see your equity, that smooth equity curve moving up. So just something to keep in mind as we go through the charts and look at a pair that took a while, like the Euro GBP, versus some of the pairs that have gotten stopped out.
Yeah. Yeah. Great point. Making sense? Yep. All right. Beautiful. Beautiful. So that's the Euro GBP. Let's hop to this Aussie dollar. Another one that's bouncing around, right? Been talked about it, that Aussie CAD and the bouncing around that it's doing. This Aussie dollar, right? We got pushed to the upside. You got the dollar kind of in a bit of a range, but you got the Aussie kind of picking up some steam, right? Commodity currency, some of that sentiment changing around the world. And in the meeting minutes from the Reserve Bank of Australia, they talked about a potential 25 basis point increase. They held rates the same, but it was part of the conversation as a 25 basis point increase. So you're seeing this Aussie push to the upside, right? And seeing some nice strong moves to the upside. So as we work our way down through the time frames, some of those zones, some of those extensions are starting to get a little extended, right? So here on the 4, we got a 618 retracement. We're headed to the D extension here, 68,136. But the question is, off of this bullish move, right? Do we get a retracement? So coming down to the 1, we're sitting here in this 118, 127 zone on this Aussie dollar, right? So do we get a retracement before pushing up to hit that 4-hour D extension and the 1-hour D extension? That's the question. So another scenario, right? As we move into the end of the year and things might start to slow down a bit, right? Just adding in those additional pieces of confirmation, right? Waiting for those trend line breaks to give you those additional points of confirmation and entry, right? So here we'll run our trend lines off the low. Whoops. All right. And then we'll be patient here and we'll wait for some additional confirmation on this one. As we know, right, the Aussie picking up steam and the dollar's kind of in a bit of a lull. Okay. So there we go. Boom. And we will watch from there. All right, so that's on the 1-hour time frame on the Aussie dollar 80-20 scenario. Looking to see if we get trend line break or if you want to use the cloud for those that use it. There's your cloud, also running to the upside, still bullish ahead. And we'll look for a cloud break there if you use the cloud as that confirmation. All right, so that's the Aussie dollar 80-20 scenario with additional confirmation. Any questions here?
Hey, Ryan.
Yes, sir.
Yeah. So I just want to remind everybody, right, how we do things with the fibs. So we know that the Aussie is rallying, right? You talked about that, spoke about that well. You don't want to buy right there. That's not
You do
that's
not
not a
want to buy right there.
that's not a buy opportunity. Now, if you've been because we have traders in the group, and we do too, right? We trade with the trend, at times for overall our longer positional, swing positions, right?
Mm-hmm.
So this is not the ideal spot to buy based on what we teach and how we use the fibs. So you may say, well, guys, you're saying that the Aussie is rallying, is bullish. It is, but this is not where you want to buy. You actually want that counter trend move. If you're trading with the trend, you want the counter trend move to play out for you because you need a low price. Everybody get that? Drop me a 2.
Yep,
Right?
yep,
The
yep.
market moves in ABCD ways. Okay. So you need this price if you haven't been in this long, right? If you're a trend trader and you haven't been riding this long and you're looking for an initial position, this is not the place, right? Based on this chart and this time frame. You need a correction to occur to get a discounted price, so you're not buying high, right? So you need this price to fall. If not, as a trend trader, you let this ride to the D extension if it wants to continue to push long, and then you look for the next opportunity for a low price when a new fib forms. That's just the patience and the discipline that you have to have. So many people that we've worked with throughout the years, that's a lot of times that's their problem. Besides risk management, that's their problem. They're not patient enough to click on a chart and say, okay, it's not where I need it to be. It's not at a low price. It's not on a high price for me to short, because that's how a lot of people are trained. Hey, I trade with the trend. Well, that requires a ton of patience and a ton of discipline, to wait to get your desired low price in this example to get long, right? So just keep that in mind. So this is one, if you're saying, hey, I'm with the trend and this is my time frame that I like to trade on, this is not where I needed to be right now. I have to click through my charts to see other scenarios and other pairs that fit my trade plan.
Mm-hmm.
So just some quick nuggets as we close out the year and we move into next year, and you do your review, thinking, how can I get better? How can I get a better grasp of this? A lot of times it's the patience and the discipline or the lack thereof that's costing us in
This
these
is
situations.
facts. This is facts. That patience game, right, is the difficult one to manage, right? One, because we as people, we're cultivated to be impatient, right? Um, and we want to be right, right? As opposed to literally just sitting and looking, like Benny said, seeing what's happening and knowing that at some point price is going to come down. So you just have to be patient, allow that to happen. So appreciate you making that point, bro. So that's what it is, right? So if you're waiting on that, sit and be patient, right? If you're trading the counter trend, wait for that trend line break and allow it to happen. If you don't get the confirmation, just like Benny said, right? If you don't get the low price to buy it, if you don't get the confirmation on price starting to make that move to the downside, let it go. Let it run to the D extension. All right. Questions on the Aussie dollar.
And then too, Ryan, put things in its proper perspective, right? If you go back and you look at, the strike rates for trend traders is not very high. A lot of times it's not even above 50%.
Yeah.
So you guys have to know that, right? That's why the strike rate is really not the most important thing, right? It really comes down to that risk to reward. As you get better as a trader, if you're trading with the trend, as you get better as a trader in regards to your top down analysis and picking the overall direction and getting that right, then that strike rate can improve. But historically, you have trend traders, some of them 35, 40%, but if you get that drop to the 61.8, for example, on this pair or deeper, you're looking at 3-to-1, 4-to-1 risk to reward ratios. So you don't need to have such a high strike rate. So keep that in
Yeah.
mind. If you're trading with that trend, oftentimes your strike rate is not going to be as high, and that's even if you don't have a tight stop.
Yeah.
That's with a wide stop as well. When you're trend trading, a lot of people don't really get that in the beginning. But there's really not a high win percentage, like over 50%, but it doesn't necessarily matter because the risk to reward is much higher if you're playing those sweet spots. So just something to think
Right.
about as we close out the year.
Appreciate that, bro. Appreciate that. All right. Cool. So that's the Aussie dollar. Let's take a look at this pound yen. Pound yen, right? We know. So here's the thing with this one is going to be an interesting one to watch, right? Because of the data coming out for the pound, right? But also because of the yen and their recent rate statement, right? That rate statement basically said they're keeping rates the same, right? Which they haven't said that they weren't going to. The market just had uh, its own opinion of what the Bank of Japan was going to do. So they were ready for the rates to move now, and they aren't. And the Bank of Japan reiterated that in their rate statement conversation. So this was going to be interesting to watch because of that interesting dynamic that we have. So daily time frame, we're in this range here, top of the range, bottom of the range, came back to the top of the range. We're pulling back now, right? So we come down to the 4, and here we are, right? Almost double top scenario there at that daily resistance level. We're pulling back off of the strong bullish move to the upside. So the question is, right, do we get another push to the upside and a deeper retracement here on this pound yen? That's going to be seen. But as we continue to come down through the time frames, we have some scenarios setting up, right? We've been looking for those low prices if you traded with the trend. Well, here you are, right? You came to a key level of support, and you got to bounce to the upside, right? Strong bullish move here. Now we're getting a retracement. So if this is going to continue moving to the upside in favor of the pound, because of the scenario with the yen and them staying in their negative interest rate stance, right, we could be in a position where we see this start to make another move to the upside, right, and make its way to this matching D extension at 186,857 to close out the year, right? And with these yens, you could see this weakness come back in as we close out the year and all of those yen crosses, right? So there's something to be aware of from a fundamental perspective and looking here from a technical perspective, right? Previous resistance, we've come back to retest that zone, right? Now do we get another push to the upside and make our way to the D extension? So there's a 618 retracement opportunity for those that traded with the trend. And this is the trade setup that you're looking for. Here's an opportunity that you could potentially take if it meets your rules. Looking at this move here to the upside on the 1 hour. Okay. Like so. Boom. There's your opportunity there. Okay. Proper risk to reward, that's 186. Take profit level is 536. Okay. So 3.5, 4 to 1 there. Okay. So that's the opportunity on the 1 hour time frame, deep retracement, looking for price to continue to the upside if it's going to do so. Now, as we come down to the lower time frames in the 15-minute, right? This is where we sit. This is that retracement that we saw on the 1 hour time frame. Question is, do we get a push down into this 118, 127 zone? Right. If we do, that'll give us an opportunity, right? Those that are trading just the 80/20s to look for an entry opportunity here. So do we get a push down into the zone? Right. An opportunity to take this back to the upside on this pound yen. Okay. So this is what I'm looking for as an opportunity here. Boom. Okay. If we get the push to the downside, right? If then statements. If price does this, then I do this. If price does not do this, then I do not do this, right? So there's a setup there. If we get a push to the downside into our sweet spot for a move back to the upside on that pound yen. If it moves off the B boundary, hey, that's okay. We're going to allow it to do its thing and move to the upside. All right. So we'll be patient there and allow that to develop and see what happens. Ultimately, looking for a high price, be it this 184 level, right? Or be it 618 if price stalls in there. We're looking for a high price for over the long term when the Bank of Japan does decide to actually make that decision to then have an opportunity to get back short, right? But we got some time before we get there. Okay, so that's my look on the pound yen, looking for retracements and price pushing to the upside there. Questions on the pound yen? No? No? All right, cool deal. And dollar CAD. Now, Reese is looking at 80/20 opportunities on the dollar CAD. Let's take a look at it. We know the dollar, right? The dollar is in this bit of a range here, right? Not a ton of movement. We had I didn't cover this in the fundamentals. My apologies. Canadian CPI came in above expectation, right? We didn't see a ton of reaction in a lot of the CAD pairs, but we did in some of them. And this dollar CAD is one, right? So we're getting this push to the downside. We got a shallow retracement here, price push to the 118, 127 zone on the daily time frame, and we're pushing through that zone now. So we got daily support, D extension here at 132, 478 with support at 131, 583. Okay. Um, a little lower than that, 131, 500. Okay. So something to keep your eyes on is that support level and the dollars. See if we get a bit of a breather here to give us a retracement. Okay. So this is on the daily time frame, 80-20 scenario. As we come down through the time frames to the 4, we had an 80-20 scenario here on the 4 as well, and price ran to the D extension. Right. So Benny talks about the alternating correction. So we could potentially see a correction here, right? As we have price just run to the D extension on this 4-hour. Okay. 80-20 scenario did not play out there. So we'll look for, see if we get price to settle in, give us a swing low, and then potentially make a move to the upside. Okay. So we'll watch and see if we get that. And so now as we come down to that 1-hour time frame, we run these fibs off the high. Boom. Right. Price is pushed into that 118, 127 zone. Previous fib here, 80-20 did not play out. Shallow retracement, stalled a bit, tried to get a push, and then that breakdown happened, right? Last week and then today. Okay. So now sub fib as well. Okay, I'll check it out. So now this is where we sit on the 1. Shallow retracement, 118, 127 zone. See if we get price to settle in here and then give us a retracement. Okay. So this is the opportunity here on the dollar CAD. And we'll look to see if we get price to meet the rules for a retracement to occur. And then we'll see if it's a high price to get short or if it's something that continues to the upside. That's yet to be seen. All right. So we said sub fib on the 4. Let's see. Let's clean this up. So that's the capital fib there. And did you run that off of this? Boom, there we go. All right. So similar look, that sub fib there, 80-20, similar look to that 1-hour time frame, right? Right in that 118, 127 zone, looking for that retracement to occur there. So some confirmation on the 4-hour and the 1-hour for that retracement opportunity. Appreciate that, Reese. Joy active 133, 656. Great work, Joy. All right, price pushing down into the zone. Boom. Beautiful. Beautiful. So let's watch and manage, right? Let's watch and manage. So there we go. There's your 80-20 on the 4-hour and the 1-hour time frame on the dollar CAD. Any questions here? My screenshot. Nope, no questions. All right, cool deal. Let me go back to this Aussie dollar. Capture this one as well. All right, cool. So we got all those. Euro dollar Kiki, I got you. Let's take a look at it. Not a ton doing, right? So from a higher time frame perspective, we haven't gotten to a 382, right? And we're just range bound right now, right? Just range bound. We got more of a hawkish stance for the euro, as Benny talked about, right? And more of a dovish stance for the Fed. So we got price in an interesting scenario here, right? Where we could potentially have a couple things. Look at it from this perspective. You got a crown pattern, potentially. Okay. We'll see if that plays out. Or if you look at it from this perspective, I'd still be a crown because you took out the low. So either way, we got a crown pattern here. Yeah, that took out the low. So crown pattern on this weekly time frame. Either way you slice it, right? We took out the low. Oh, I clicked the wrong thing again. There we go. I think I got it now. Yeah, yeah. All right. Boom. Left tip, right? One, price breaks the trend line. Two, price takes out the A. Three, for C, your right tip. Four. I'm sorry, three, identify your left tip. Four, foresee your right tip. Foresee your right tip. Boom. Right. So we'll see if we get that to play out there. Okay. So we'll watch for that on the higher time frame, like so. All right. So we'll see if we get price to move to the downside. That's also going to be an interesting situation dealing with the dollar. All right. So that's from a weekly time frame perspective. As we move down, here we go. Right. And you see that rangy action there. Okay. So we'll see at some point, do we get back into these $1 ranges, right? That parity that we came to and we broke below. We'll see if we get back to those levels at some point. All right. Coming to the 4, right? There's your bounce back and forth there. Okay. So not a ton. We're pressing down to the downside now. We'll see what transpires as we continue to move forward. Coming to the 1 hour. There's your deep retracement. You got a pullback, and now price is pushing back down to the downside. So not a ton doing from a setup perspective. You come down to the 15, and you had a 382 touch here, right, with those wicks. So this one was one of those interesting scenarios, Reese, where you had that AB boundary form and wick at that 382, pushed into that 118, 127 zone, and we're seeing price come back into the zone, right? So this is going to be one to watch to see how things continue to develop with the two pairs, right? So no trade setups right now, but one to watch and see if something develops, right? 618 retracement on the sub fib, matching the extension there at 109.305. So potentially more downward movement, and we'll see if we stay inside this AB boundary on the 15-minute time frame or not. All right. So that's my assessment of the euro dollar. Questions there? We could potentially be in for a longer term move to the downside over the next year, but that's yet to be seen. You're welcome. Welcome. All right. Cool deal. Benny, you got anything top of mind as far as pairs are concerned, bro?
No, sir, not at this time.
Cool deal. Team, we got a couple minutes left. Anybody got anything else on your radar that you want me to take a look at? Oil? Yep, let's take a look at it. Oil and gold. We'll see if we can get to both of them. Let's see. Oil pushing the TP1 off the 80-20 here on the 4. Shallow retracement. It did its dance, took its time, but we're seeing that push, right? And we're seeing the fundamentals come in alignment with that move to the upside that we've been in for a little bit, right? So pushing the TP1, that's just about there. Boom, 62 pips to the upside, clearing that. And we'll see if we get price to continue with the rhetoric that we're getting out of out of the Middle East, right? So we'll see what happens here, but moving to the upside in a beautiful way. So that's on the 4 hour. So let's go back to the daily, clean this up. And here we are on the daily time frame. So a couple things here. I got fibs running in both directions, and this is why. Here, move to the downside, AB boundary, right? Boom. 8-6 retracement on our capital fib, right? And we're looking for that retracement to happen on the 4 hour. And this is why we came into a deep retracement level, created a new swing low there, level of support, boom, inside the AB boundary. Um, uh, Price stayed inside the AB boundary and you got the reversal, right? So now, do we get price to continue moving to the upside? We got a next level of resistance at 79.73, right? And matching the extension is at 88.09. So let's see if we get price to pull back and continue moving to the upside to get to that matching D extension. All of that is yet to be seen, but this is why I had these sub fibs also running to the downside here, right? Boom. We had price here. We got a wick of that 382, pushed down into that 118 and 127 zone, and now we're coming back to it. Okay, so moving to the upside, strong bullish move. So at some point, right, as price starts to get extended, could see a pullback and then a continuation on the lower time frames, right? So coming back to this 4 hour now, this 80-20 here makes sense, right? Deep retracement on the capital fib on the daily. Here's your reversal. Here's your reversal, right? Benny broke down last week, right? The that time frame analysis and the lower time frames being fractals of the higher time frames, right? Here's that fractal in that reversal, right? That reversal off the let's say 8 hour, off that daily time frame, right? You got 4 or 5 candles there, and then there's your reversal and how that built out. So now we're looking for price to continue moving to the upside. So as we come down to the 1, boom, there's your 80-20 on the 1 hour as well. As price developed and moved out. So now we just track those ABCD waves to the upside. Boom. We hit a D extension. Hit a D extension. So pullback coming soon. So we'll look for a pullback and continuation. All right. So that's where we are on oil. Moving to the upside, pullback potentially coming in the near future. Right. And we'll look for a reset of our scenario. Right. So that's oil. Based on the fundamental side, potentially got more upside to go. And technically, we could potentially have more upside to go. All right. Okay. Being new and learning, I'm seeing how the training videos come into play, learning more and understanding a little bit more each time I come to these sessions. Beautiful. Beautiful. Right. Step by step, step by step, step by step. Take your time, give yourself grace, immerse yourself in the experience, and you'll see progress, right? Immerse yourself in the experience, practice, immerse yourself in the experience, ask questions, practice, immerse yourself in the experience, step by step by step. You'll see progress, you'll see growth. Kudos to you for digging in. Greatly appreciate you. Greatly appreciate you. So let's take a quick look at gold, and then we'll hop off so I can get the kid to school. All right. Gold. There was our 80-20 on the 1 hour, got the beautiful move up, and now we're just ranging, right? Just ranging, similar to the range on the dollar. So coming back to the daily time frame, fib running off there. We got, where's that fib coming from? Yeah, okay. There's AB boundary. This fib is just coming off the low here, right? AB boundary, you got a shallow retracement, price pushed, hit the D extension, and then started that move back down. So now we come here to this capital fib, Coming off the top, shallow retracement, price pushed into the 118, 127 zone. I don't know if you can see that there. Boom. There's your 80-20 scenario trying to play out. Right? Strong bullish move, getting some consolidation here. See if we get a continuation to the upside to get to that TP1 level. Right? So that's the 80-20 on the daily, coming back down to the 4. There you have it. 80-20. Boom. Shallow retracement, 118 and 127 zone, trend line break, bullish push. Now we're in consolidation, right? Fractal of that higher time frame, you see the move happen there. Consolidation, and now we'll look to see if we get continuation to the upside. Boom, get us to that TP1 level at least. Okay. As we come back down to that 1, there was that full move, right, in the zone. Okay, so potentially looking for more upside movement there, right, off that 80-20 on the 4. Still haven't got to TP1. But we might get a pullback before that, seeing as we had this nice, strong, bullish move there. So we'll see what happens as price continues to evolve. Could see consolidation for a bit, though, right? We did wick a 382 there. We'll see. We'll see. That one's consolidating right now. We just need price to break out in one direction or the other. Okay. But could see that breakout be to the upside. So we'll watch and see how that develops. Okay. There's our range. Okay. That's the quick peek at gold. Questions? You're welcome, done it. No? Benny, anything before we wrap it up, bro?
Yeah, just like for example, right? This is a great example on gold, right? In the zones that we trade. So if we're in an 80-20 scenario, right? It hit our zone and then hey, it went bullish 2 TP levels right on the 80-20. Now, if I'm with the trend and I'm thinking that this is going to stay long, right? And I'm looking for an initial position, I don't have anything right now. Why? Because it didn't even for that fib running to the upside, it didn't even go to my buy zone. You get what I'm saying? Like it's not in our sweet spot. So if I'm looking long on gold, this is not my place right now. So the decision, it becomes a lot simpler and not as complex because we only look to trade certain zones. So when it's trying to figure itself out like it is now, it's like, well, if I'm looking for an initial long position, that's not where I want to buy, right? If I'm looking for this to continue to go to the upside. The 80-20 zone is where, as far as one of our sweet spot zones to buy off the lows, that occurred, right? So some of you may be out of it right now, like, hey, this is the two TP levels. I only trade 80-20s. The market can do whatever it wants to do at this point. I don't care. But for those of you who like trading those up fibs and saying, hey, I'm rolling with this continued trend, then you need to wait for a low price to get long. So it just helps you. How we're teaching it, it really just helps you filter out a lot of the noise and trying to because if you stare at the charts long enough, everything starts to look good.
Everything
Right?
looks good.
Everything starts to look good. But if you just keep that discipline and maintain the zones that you trade, they're natural filters. Right? So just keep that in mind. That's it, man. Great session.
Appreciate you, man. Appreciate that last message. Good people. We'll be back at it tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session with my awesome partner, Mr. Benny Allen. Until then, have a phenomenal Wednesday. We'll see you in the morning. Peace.